The silver market has just delivered one of its boldest moves in more than a decade. Prices are trading firmly above $47 an ounce, levels we have not seen since April of 2011. This surge has caught the attention of investors worldwide, sparking excitement, speculation, and a fair amount of caution. In today's deep dive, we're going to unpack exactly what is happening in silver right now, why prices are climbing so fast, the risks that experts are warning about, and what signals we should all be watching closely in the weeks and months ahead. Stay with me, because in the first few minutes, I'll reveal how a mix of politics, central bank expectations, and industrial demand has pushed silver into the spotlight once again. This isn't just about charts or headlines. This is about a convergence of forces, from Washington's government shutdown to surprising labor market data to global supply constraints, all of which are shaping silver's dramatic rally. So let's get started. Why silver is surging? Silver has always been a unique asset because it wears two hats at once. On one hand, it's a precious metal that investors treat as a safe haven, similar to gold. On the other, it's an industrial metal essential for electronics, solar panels, and electric vehicles. That dual nature means silver can sometimes move faster and more violently than gold, both up and down. Right now, several forces are combining to drive silver higher. First, Federal Reserve expectations. With the U.S. government shutdown rattling confidence and the ADP jobs report showing unexpected weakness in employment, investors are betting that the Federal Reserve will have to cut interest rates sooner than later. Rate cuts reduce the cost of holding assets like silver, which don't pay interest. In turn, that makes silver more attractive compared to bonds or cash. Second, safe haven demand. Whenever political and economic uncertainty rises, money tends to flow into metals. The shutdown in Washington has amplified investor nerves, and that anxiety has boosted the demand for both gold and silver. Gold futures just closed at a new record high, while silver hit levels not seen in more than a decade. Third, supply deficits. This is a story that doesn't get enough attention. Silver production has struggled to keep up with demand for years. In fact, 2025 is shaping up to post another deficit of nearly 200 million ounces. Mining challenges, lower ore grades, and regulatory hurdles have all constrained output. Unlike gold, silver is often mined as a byproduct of other metals like copper and zinc. That means producers can't simply ramp up silver output when prices rise. Fourth, industrial demand. Beyond its role as a hedge, silver is vital for green energy technologies. Solar panels, electric cars, and high-tech electronics all require significant amounts of silver. With global efforts to expand renewable energy and electrification, silver's role in industry is only growing. Fifth, technical momentum. Once silver broke through key resistance levels in the mid-40s, momentum traders piled in. Technical analysts see the $50 mark as a historic resistance zone. If silver can decisively break above that, the next leg higher could attract even more attention. Risks and red flags. But let's not get carried away. With every rally comes risks, and silver is known for its volatility. Here are the red flags experts are warning about right now. 1. Volatility and sharp reversals. Silver can swing more violently than gold. While today's move is impressive, history shows that silver often experiences steep pullbacks after strong rallies. 2. Federal Reserve policy surprises. If inflation remains sticky, or if the economy suddenly shows strength, the Fed could delay or even scale back expected rate cuts. That would strengthen the US dollar and pressure silver prices. 3. Industrial demand risks. Silver depends heavily on global growth. If the world slips into a recession, demand for electronics, solar installations, and cars could slow, dragging silver with it. 4. Supply response. While new mines take years to develop, sustained high prices may encourage recycling or investment in production. Any sudden increase in supply could cap the rally. 5. Technical ceilings. The $50 to $55 range is historically a tough barrier. If silver fails to break through, we could see heavy profit-taking and a correction. 6. Speculative bubbles. When too many investors chase silver in a frenzy, it can lead to a blow-off top. That often results in sharp crashes, just as we saw in 2011 when silver spiked above $49 before collapsing. 7. External shocks. Regulatory changes, environmental restrictions, geopolitical tensions, or trade disputes could all alter supply chains and market dynamics overnight.
Key signals to watch. If you're following silver closely, here are the signals worth monitoring. Federal Reserve statements. Any change in tone toward hawkishness could quickly reverse bullish momentum. The US dollar index. Silver and the dollar usually move in opposite directions. A stronger dollar may cap silver's gains. The $50 line. Breaking and holding above this level could define the next major rally. Failing to do so could signal a pullback. Support levels. Watch for silver to test prior resistance around $40 to $45. If those levels hold, it could provide a foundation for further upside. Industrial demand data. Solar panel orders, EV production, and electronics growth are critical. Mining output and recycling flows. Any surprise increases could shift the balance. Scenario analysis. Let's map out 3 possible scenarios experts are considering for the months ahead. Bullish scenario. Silver climbs into the $50 to $70 range. This requires decisive Fed rate cuts, a weaker dollar, strong industrial demand, and continued supply deficits. In this case, investor enthusiasm could amplify gains. Base case scenario. Silver consolidates between $35 and $55. Here, some Fed easing occurs, supply deficits persist but don't worsen dramatically, and industrial demand remains steady. The rally continues but with healthy corrections. Bearish scenario. Silver falls back into the $25 to $40 zone. This could happen if the Fed stays hawkish, the dollar strengthens sharply, industrial demand weakens, and momentum fades. In this scenario, profit-taking could accelerate, leading to a significant correction. What staying alert really means. So what does it mean to stay alert in today's silver market? It means respecting both the opportunity and the risk. Silver's dual nature as both an industrial and a precious metal makes it unpredictable. Staying alert means watching the Fed, monitoring the dollar, and keeping an eye on demand trends in energy and technology. It also means understanding that silver's history is filled with both dramatic rallies and equally dramatic collapses. Silver above $47 is a milestone. It reflects not just investor enthusiasm, but also deep structural forces, from deficits in supply to surging demand in clean technology. Yet with every milestone comes the reminder that markets move in cycles. Today's breakout could pave the way for a run at 50 and beyond, but it could just as easily invite volatility, corrections, and uncertainty. The takeaway is not to assume silver will only move in one direction. Instead, it's about recognizing the drivers, the risks, and the signals that will shape its path. Whether silver pushes through 50 or stalls and retreats, what's happening now is historically significant and worth watching closely. Disclaimer: this video is for educational and informational purposes only. It is not financial advice, investment advice, or a recommendation to buy or sell any asset. The content reflects publicly available information, expert commentary, and market analysis, but markets are inherently uncertain and subject to change. Always do your own research and consult with a licensed financial advisor before making financial decisions.